Hello, I hope this finds you well. Happy New Year. It is January 2020, and in about 3 minutes, I wanted to share with you a brief overview of 2019, as well as shed some light on what we may expect this year in 2020. So let's start with, wow, what a difference a year can make. You know, this time last year, the stock market was plunging, investors were concerned about a recession, and a full-blown market panic was going on. What has become the longest bull market on record was about to end. Our confidence in the investing fundamentals, as well as our commitment to be goal-focused and planning-centric, helped us stay the course, and we got through that short-term bout of volatility. Remember, investing failure comes from constantly being reactive to economic as well as market data. So looking at 2019, the S&P 500 did see a drawdown over May to June. It was about 7%, and it only lasted about a month. Technically, this can't even be considered a correction, as the index did not decline anywhere near that 10% threshold, but something really interesting happened that I wanted to share with you all, and that is investors panicked. We saw U.S. stock mutual fund and exchange-traded fund, or ETF, outflows soar to levels not seen since the Great Panic of 2008. Let me repeat that so it sinks in. A 1 month, 7% decline led to a flight from stocks not seen since the financial crisis. I have a hard time looking at this data as anything other than a powerfully suggestive contrary indicator. We have plenty of time to worry once the stock market becomes topic of conversation at cocktail parties again, and everyone around us is excitingly positive and optimistic, but we're just not seeing that right now. So despite the fact that we now have clarity around some of the market's largest uncertainties, namely the China-US trade relations, the Fed's interest rate policy, as well as Brexit, it is probable that some of the returns we would have experienced this year have been pulled forward into 2019, and we may not match our results this year to what we experienced last year. But let me remind you that this is irrelevant. The only benchmark we should care about is the one that is telling us if we are on track to reach our goals. It is also probable that the fallout from the impeachment, international economic data, as well as the potential for a highly charged U.S. election could cause increased volatility. But remember that these market sell-offs, while frequent, are ultimately temporary, and let us not act like the investing public did back in May and panic. Overall, this year, we do expect for the stock market to increase. Thank you so much for taking the time to watch this. I wish you and your families a healthy and prosperous new year. And as always, if you have any questions, please feel free to reach out.